Director at BCIC Insurance, Peter Levy, told us last week that the Financial Services Commission, FSC, was planning to effectively ban insurance premium financing, which allows you to pay your car and home insurance in installments with interest.
I'm still not fully understanding their motivation. I think they're focusing in on what might go wrong. And maybe there have been a couple instances where something did go wrong.
Well, the FSC has clapped back. Their Director of Insurance, Raymond Knight, joins us on this special live episode. And later, the analysts weigh in on the latest market developments. The economy expanded nearly 13% between April and June, reflecting one of its fastest growth rates. Unfortunately, it's still trailing pre-pandemic levels. We'll discuss. And Fesco and RJR stocks are hot this week. Both have more than doubled in just a few weeks. We'll find out what's behind the sudden rise. This and more on Taking Stock, the Caribbean's #1 business show, with me, Kalila Reynolds, 3-time Business Journalist of the Year. Catch new episodes of Taking Stock every Tuesday at 8 p.m. on YouTube, KalilaReynolds.com, and all your favorite podcast platforms. Let's get this money. Hi, everybody, and welcome to Taking Stock. It's our second live episode. How exciting is this? I'm so glad to have you join us live. It's like a whole different ball game when you're live because you screw up. I mean, that's it. You just have the one chance. But it's also fun because I get to interact more with you guys. So let me know in the comments below in the live chat what you want to talk about, especially later on with the analysts. We have the gentleman from the FSC on standby to join us in just a few moments as well. So start typing your questions because this is going to be a very, very interesting conversation in both segments. So let me know what questions you want me to ask. And since this is live, I have the opportunity to present the things that you really want to know. And of course, I've got to remind you to head over to my website, KalilaReynolds.com, and sign up for my newsletter at KalilaReynolds.com/newsletter so that you can get my email newsletter straight to your inbox twice a week. Guess what? All of you who participated in the survey a couple of weeks ago, you're going to get those survey results free of cost right in your inbox, but you have to be a newsletter subscriber in order to get them, because later on, when I launch another product at the end of September, you're going to have to pay for it. I'm only sending it out once, and it's going to be this Sunday in the Sunday edition of the newsletter. So it's going to have the survey results, and it's going to be telling you all about the various brokerage firms in Jamaica. For new investors, this document is intended as a guide to help you understand or figure out who might be the best brokerage firm for you. Because people ask me all the time, Kalila, who should I open my investment account with? It's not that easy to answer that question because it depends on how much money you have to open the account and what your personal needs are in terms of what you need from a broker. So we did the survey, over 1,000 people responded, and so now we're able to help you make that decision better, sending it out in my Sunday newsletter, Sunday coming up. One opportunity, after that, you have to pay for it. All right, so come on, let's get this money.
Here's what's hot, brought to you by Jamaica Money Market Brokers, your best interest at heart. Barita Investments is seeking to raise $15 billion, or about $100 million in another additional public offering APO next month. If the APO is successful, it would be the largest capital raise in the history of the Jamaica Stock Exchange JSE, surpassing its own record set almost a year ago when it raised $13.5 billion, or about $93 million. Barita's board has approved the issue of 125 million new shares, with the ability to upsize by a further 62.5 million shares. The offer is priced at $80 per share. The APO opens on September 3 and is scheduled to close on September 21, or any date as determined by the group's CEO. Shares are also being reserved for specified investors in amounts to be determined at the discretion of the company. Massey Holdings has chosen a joint bid by First Citizens Investment Services and Barita to provide advice for the company's cross-listing on the Jamaica Stock Exchange JSE. According to an article in the Trinidad Express, the cross-listing is expected to take place in January. Massey Holdings President Gervais Warner said the joint bid was chosen after a competitive selection involving players in Jamaica and Trinidad and Tobago. The selection was made on August 8. However, Warner said the company has not advanced discussions. No decisions have been taken yet as to whether the shares will be cross-listed in Jamaican dollars, US dollars, or both. Warner said there are several options, but the company is not considering an additional public offering APO. FCIS and Barita's connection started in 2020 when the wholly owned subsidiary of First Citizens Bank purchased over 54 million shares in Barita's September 2020 APO. The bank, owned by the TT government, also acquired an additional 12 million shares last December. Massey would be the second Trinidadian company to cross-list on the JSE in recent months. Guardian Holdings did so earlier this year. The Financial Services Commission, FSC, says it's not banning insurance premium financing, nor is it prohibiting insurance companies from accepting monthly payment of premiums by policyholders. It says it has also never and doesn't intend to restrict companies from receiving premiums monthly within the context of current requirements. Their position was relayed in a letter to Kalila Reynolds Media last week in response to concerns raised about insurance premium financing on the last episode of Taking Stock. FSC says there was an initial proposal in a consultation paper for insurance companies and intermediaries to be restricted from offering premium financing. Entities or companies that are not insurance companies or intermediaries are free to offer premium financing. It says this was to protect policyholders from a potential conflict of interest that may arise with insurance entities offering the policies, determining the premium charge, and then in turn offering a loan to finance the premiums. The FSC says its main concern arose following complaints about a practice that appeared to infringe on the policyholders' right to full disclosure that left them at a disadvantage. The regulator says it has since committed to reviewing its position on whether insurance entities may offer premium financing under certain conditions that protect and are fair to the policyholder. Meanwhile, the Caribbean Blockchain Alliance has countered claims made by eCurrency CEO Jonathan Dharmapalan on Taking Stock that blockchain technology is a vulnerable security mechanism. The CEO was comparing blockchain to the company's technology being used for Jamaica's central bank digital currency CBDC. Dharmapalan told Kalina Reynolds that the platform was more secure than Bitcoin, which uses blockchain technology. However, in a blog post on LinkedIn, the Blockchain Alliance wrote that blockchain mechanisms have proven to have superior security, referring to its use in the Bahamas' Sand Dollar, as well as the Eastern Caribbean Central Bank's Dcash. It further countered, saying blockchain is unmatched in its security, auditability, and tamper-resistant anti-corruption mechanisms. In its post, the Caribbean Blockchain Alliance also appealed to the Jamaican authorities to reconsider its approach to minting the country's digital currency and to consult with experts in the region rather than outsiders who may not have their best interests in mind. The Planning Institute of Jamaica PIOJ has estimated that the economy grew almost 13% between April and June when compared to the similar period last year. Director General of the PIOJ, Dr. Wayne Henry, says the outturn largely reflected the impact of the relaxation of measures to manage the pandemic. The hotels and restaurants sector is estimated to have led growth, jumping 330% over the review period. This led to a 14% increase in the services industries. The goods-producing industries also expanded by 7.8%. Only the mining and quarrying subsector failed to grow due to technical and logistic issues. For the current quarter, growth of 4 to 6% is projected. The PIOJ is also expecting growth within the range of 6 to 10% for the fiscal year. Regional payment systems provider WePay has relocated its headquarters from Trinidad and Tobago to Jamaica. The company officially opened its offices in New Kingston last week, with plans to invest $4 million in the country over the next year. $1 million has been earmarked for salaries, $1.5 million for direct cash investment, with the remaining $1.5 to be invested in technology infrastructure. The company plans to hire an initial 40 persons. Last December, WePay CEO Aldwin Wayne had told the Trinidad Express that the company would be moving its offices to facilitate the needs of countries understanding the future of digital payments. The relocation comes in time for the start of the pilot of Jamaica's digital currency. Speaking at the office opening, Wayne said the company intends to use technology to reach every corner of Jamaica. WePay was founded in 2017. The company is expected to do an IPO to list on the Jamaica Stock Exchange in the coming months. Scotiabank customers can now transfer funds to loan accounts and make prepayments for up to 2 future payments using the bank's mobile app. It's part of a new round of upgrades recently announced by Scotia, in line with the rise in online and mobile transactions sparked by the pandemic. The updated Scotiabank mobile app also allows customers to transfer funds from their Scotiabank deposit account to another customer's loan account. There are also quicker actions for the management of credit card payments. Alerts for missed credit card payments, declined and reversed transactions are soon to be added. Customers are also now able to manage their personal information on file, as well as document uploads for new address verification. The multi-factor authentication feature has also been enhanced to verify a customer's identity and send notifications that keep them aware of their transactions. What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart.
Segment of Taking Stock is brought to you by Bulwark Insurance Agency. Insurance made easy. All right, let me unmute myself. That probably would help you to hear me. Like I was saying, we are live on this very special episode of Taking Stock with me, Kalila Reynolds. Hi, everyone. Hi, Ingrid there in Orlando. Good to have you on. That's Ingrid Jarrett. Ingrid Stevenson, good evening to you. David Gray, Roger Robert, Simone Gross, everybody who is in tune. Hi, Damian Hibbert. Glad to see so many of you on with us this evening, joining this special live episode. I get so excited when we do live. It's like taking me back to my radio days, my live TV days. YouTube Live is a different creature though, so we're still kind of getting the hang of doing this whole thing. But as promised, we are having our main discussion this week around this issue of insurance premium financing. If you own a motor vehicle or a home, you may be familiar with this. The insurance companies, at least some of them, offer you the option to pay in monthly installments. Sometimes you can pay maybe 3 payments, 4 payments over the course of the year. You may be able to pay in 2 payments, or you can pay the one lump sum up front. A lot of people tend to put it on their credit card because it tends to be a pretty big bill. And the difference between putting it on your credit card is that you end up with that 40% interest versus doing a premium financing. Interest can run you, according to Peter Levy last week, anywhere between 7 and 10%. So the concern was raised that the FSC was reportedly seeking to ban this option, insurance premium financing. The FSC wants now to clarify its position. So today we have Director of Insurance at the Financial Services Commission. That's Raymond Knight. Hi, Raymond. Good evening, and thank you for joining me.
Good evening, and thank you for having me.
How are you doing today?
I'm well, thanks. And you?
I'm good too. I'm good. Doing well. All right, so let's get right into this issue. So just clarify for me what the FSC's actual position is.
Okay, thank you, Ms. Reynolds. The FSC has never sought to outlaw or ban premium financing. First of all, what we were going to propose, or what we were proposing in the initial concept paper, which we issued last year, was that premium financing would be restricted to non-insurance entities. That was the initial proposal. We are of the view, and I just want to make it clear, let me just start by saying premium financing is actually different from monthly payments of premiums. That is a misnomer. Monthly payments and modal payments of premiums were never ever under threat of being prohibited in any way or form. We allow it, and we have never proposed to restrict companies from receiving premiums monthly. Premium financing is where there is an interest charge that is applied to a loan or financing agreement.
Well, before you
premiums.
continue, Before you continue, is there any insurance company that offers that option to pay monthly without any interest?
Interest is, there might be a fee, but it is not interest, nor is it, and the thing is, we're not in the business of regulating premium financing at this time. It was a proposal. We have never had a reason to say premium financing was, something that was significantly on our radar, save and except the market conduct issues that we were seeing in the complaints. And because of those complaints, which came to bear, we decided that in response to that, in listening to the public, we wanted to make sure that the necessary controls and containment of the issue would occur.
So I'm
So
going to come back to the complaints in just a minute. So are you saying that this proposal is no longer on the table?
it was under review. So when we do a concept paper, we have consultation with the sector, and because members of the industry, the insurance industry, had raised some concerns and said to us, could we consider something else? We decided to critically examine this from early August. But even prior to
As
that,
in this month, August?
no, well, we decided to consider it from mid-July, but we had made concrete internal decisions
Meaning
to
this year or last year?
this year.
Okay, so
So
this is recent.
prior to any reports in the media or anything like that, we had already given commitments to stakeholders that we would review and critically examine, the position to see if there was any way that we could be fair to customers and make sure there's fair conduct to customers and still allow premium financing, which is a separate thing from monthly premium payments.
So have you arrived at a conclusion? Is that review still underway or is it finished?
It's still underway. We have looked and done some research in relation to where premium financing is allowed, where insurance intermediaries and insurance companies are allowed to offer premium financing. As I said, we've never said that other entities, any other company or any other entity of sorts could not offer premium financing. But what we were concerned about is the conflict of interest that might arise. So what we did was say, well, because policy holders relative to insurance companies have less information about the policy price and premium determination, we were not comfortable with the possible conflict of interest that was arising in the practice that we were seeing in the marketplace, where persons were complaining, in addition to the fact that the pricing of these premium financing situations were the way they were, but also that they were able to terminate their policies without their knowledge or notice given to them of this termination. And that was a complaint we were receiving, which basically raised this concern.
Okay, so the issue is them not being notified about the policy being terminated, but the policy, and you can explain this for those who are just logging on and maybe not quite as familiar with the situation. From what the insurance companies have explained, right?
Mhm.
The way it works is that basically the insurance payment is due for the year. It's due annually. So
Yes.
what they offer is an option for you to take a loan with the same insurance company, which is why you're saying that it may be a conflict of interest. So the insurance company, which is giving you the policy or selling you the policy, is also offering to give you a loan to pay for the policy. And that
Yes.
loan will attract interest.
Yes.
And so, and you are to repay the insurance company, which is in this case now the lender, monthly installments,
Yes.
right? So what the insurance companies are saying is that, well, if the policyholder, aka the borrower, defaults on that loan, they are going to cancel the policy. And isn't that the way it works for any other loan? If the lender defaults on payment, they shouldn't be entitled to the rest of the loan, shouldn't they?
Yes,
Isn't
that's the
that how it should
case.
work?
But it's usually with notice or some kind of forewarning. So the issue is, and this is where the conflict arose in our mind, there seem to be separate contracts. The policy contract says, hey, I as an insurance company, giving you insurance, making sure that you're covered for a particular event, and you have a certificate that says so, and it is paid up. If you had gone to an independent person and asked to borrow some money in relation to that, you would, there would also this issue would still arise if there was no notice. But if it's an insurance company and there is no notice, there's still an issue. So it's the notice, no matter who is offering the loan, that was the control that we were concerned about. But further, that was one element of the concern that we had. The other element is if someone, the conflict of interest, if someone is offering a premium that, say, is a little more than what is needed by the policyholder, there would be some kind of incentive for an insurance company, a possible incentive, to offer a higher premium because it carries a higher premium financing opportunity to earn for the company. So that's where the conflict may arise. So that
And
is one of the issues.
has that been the practice? Have companies been doing that? So
Well,
companies have been offering more than you actually need to cover the policy?
Well, the thing is, we had complaints in relation to certain practices. So, to the extent that they were uncomfortable with the fact that they were unable to offer services, receive services, and probably pay for the loans or meet the loan requirements, that might be one element of the complaint. They're saying, hey, they were paying for something that they didn't know why or how or why it was so much, for argument's sake, and then all of a sudden it was removed. So that might be one element of a complaint. And we're not saying that it's also the possibility. We were looking at making sure that market conduct issues were mitigated. So we're moving forward in a way that we're looking at all the market conduct issues that are arising that we've noticed from complaints and trying to address this. And this was just one of them. This was one of 12 areas that we raised, but this is the one that got the attention of a particular company. But we had already had discussions with the IAJ and its members about the other elements of the concept paper. So this particular issue was raised by your last guest, and we sought to address it based on our further critical examination. So it hasn't just gone on deaf ears that there is a possibility that there are ways and means of mitigating the conflict, but we would have to examine it critically to see how that mitigation could be done. And what we've seen so far that led us to, some internal reviews is that we looked at other jurisdictions and saw that there was significant disclosure requirements and that there were more than one regulator involved in the oversight of this activity when it was allowed for insurance entities to offer premium financing. So we would have to then look at those rules and see how we could apply them if the necessary infrastructure exists in Jamaica to support that. But it's something that we're critically examining.
Okay, because in speaking with Peter Levy last week, one of the concerns is that they feel like there hasn't been good communication between the parties, and he painted a picture that this this was imminent, in fact, and that the FSC was essentially resolute that premium financing is not to be allowed, and this is going to end up going to Parliament, and Parliament would probably pass it, and then premium financing would be banned, and the little guy who can't afford to pay that full premium upfront would be disadvantaged.
Okay, again, let me just state, premium financing was never going to be banned. It would have been restricted. Insurance companies and insurance intermediaries would not have been able to offer. That was the original proposal. We had discussions with your guest in July. We were not resolute. We said we would take it under advisement and review. We were doing so. And we continue to do so. There is nothing that we have issued to say our position is final. And again, it is left to the legislators to decide on what is final. There's no guideline that says this is how we are saying it is to be in the interim until any decision is made. So in no way is there a ban imminent. It was our position based on what we noticed in the marketplace and trying to take corrective actions around market conduct activity that was not satisfactory.
But what's the difference between an insurance company offering it and a different company, a bank or other financial institution offering premium financing?
So it removes the conflict of interest there. So if Raymond is going to get a premium to pay, right? An insurance company does a needs analysis and says, hey, your premium that you need to pay is $5. Raymond has to now look outside and find that $5 from borrowing it from somebody, right? It's not that he's going to be influenced and say, hey, spend a little bit more and buy a $10 policy, because it's not that much more in terms of premium financing or otherwise. There's no inducement. There's also no tide selling that could occur. So from a market conduct point of view, it limits misconduct in the marketplace if it is not, if there are not the necessary controls that are in place to support a company offering it, an insurance company. So an independent person is offering you this loan, and that helps the situation in terms of removing those kinds of misconduct activity that I just mentioned. And we don't have remit over those other entities. So what we would want in any case is that whoever is lending, that proper disclosures are made to the policyholder so that they feel like they're being treated fairly, that they know that there's a termination that may follow if they do not service that loan. Where there's some ambiguity around that, then the policyholders aren't being treated fairly. So we are going to insist on proper disclosures, and that's one of the ways that could mitigate the concerns that we had before, whoever offers it. But also, because if it's an internal situation, think of a company who gave you the financing and also you would have paid the premium to. They know that you haven't paid it, so they can just automatically, they don't have to contact individuals, they don't have to contact the company. There's no, for want of a better word, gateway to say, don't terminate the policy. So if we were, as a regulator, saying to the insurance company, don't terminate the policy unless you're satisfied that your policyholder has been notified or that reasonable steps have been taken, for argument's sake, that's a possible control. But in a situation where everything is internal, under one hat, under one roof, there would not necessarily need to be there might not be a stringent control around those steps. So that was the concern that we had initially. But if we can come to a set of requirements and regulations that can assist, then we will continue to examine this and see if it's possible.
All right, so I'm glad to hear that there is room for compromise and that there is something. I think it just needs to have more discussion between the FSC and the insurance providers so that indeed these issues sound like issues that can be rectified. But is there a timeline for this decision?
We have not pushed a timeline. Again, everything would be left to the legislators for it to be a settled matter. So it wouldn't be law or anything that would be enforceable until it goes into or before the legislators, right? So it is based on, we can make proposals, then it goes to the legislators, and based on their timetables, it will be considered. So it's in no way imminent or, the horizon is right in front of us. Far from it. It's probably some ways away until the legislators have debated it.
Okay. Well, I want to thank you so much for joining us today and clarifying that position, Raymond Knight from the FSC. I'm glad to hear that there is some room, and we look forward to hearing the updates on this issue and what comes next.
Certainly, and thank you for having me.
Thank you so much. All right, that's it for this segment of the program. Up next, we'll have hopefully the analysts, hopefully a market recap, and we have the analysts as well.
this money.
All right, so I am going to have to do a live version of your market recap because, like we said, this is a very live production and things happen, things go wrong. Sometimes we have technical glitches. If I can only bring up that script any minute now, but this is the month of August, so we also have a look at what has happened in the past month. So let me give you this live edition of your market recap, brought to you, of course, by Sagicor Investments. Think wealth, think Sagicor Investments. So the Jamaica Stock Exchange advanced with the combined index gaining about 0.5%. Sorry, I don't have these graphics for you right now. 113 stocks traded across both the main and junior markets of the JSE for the week ending Friday, August 27, 2021. We had 57 stocks that went up, 47 declined, and 9 stayed the same. So more went up than down. So that's typically a good thing. 255 million shares changed hands on the Jamaican dollar market, totaling $2.3 billion. So which stocks traded the most? Fesco took up more than half of the market, 58% of market volume. People were feeling Fesco in the past week. Investors bought and sold 148 million shares in the company. And Fesco was also the biggest gainer in the past week. The stock will open tomorrow morning, September morning, at $3.17. It's up 46%. And no surprise here, Fesco was up also the second highest for the month of August, and it's going to open at $2.48 actually. So for August, it's actually up 71% for the full month and up 46% in just the last week alone. So Wigton Wind Farm ordinary shares traded the second most. People bought and sold nearly 18 million shares in Wigton last week. The stock gained 1 cent to open at 56 cents. And Radio Jamaica, RJR, another hot stock this week, rounded out the most traded, taking up nearly 6% of market volume. People bought and sold nearly 15 million shares in RJR. And RJR was the past week's biggest gainer. It's up 85 cents to open the new week at $4.35. RGR was also the biggest gainer for August. The stock opened September 1 tomorrow at $4, and it was up 98% in August. So at the start of the month, RGR was at $2.02, and as of today, it's at $4, so almost double in the past month. We're going to be discussing this very shortly with the analysts. So let's see who else had the biggest gains last week. Productive Business Solutions, that's PBS, 9.75% cumulative redeemable preference shares. That was second on last week's biggest gains, up 29% to open the new week at $104. And then rounding out our biggest gains for last week, we had KLE Group, which gained 27 cents to open the week at $1.22. Looking at the losing side now, which stocks didn't do that well. ISP Finance Services was the biggest loser for the week. They're down 30%. Who else do we have here? ISP Finance was also the biggest loser for the month of August. They're down $25 to open. They're down to $17.40 to open the new month, September. So they started the month at $25. They end the month at $17.40. Also on the losing list for August, Jetcon Corporation. Its stock price is down 22%. The stock opens September 1 at 91 cents. And Jetcon was also the second biggest loser for the month of August. Its stock price is down nearly 25% for the week, and it opens the new month at $1.01. Rounding off the biggest losers, we have Cygnus Credit Investments ordinary shares US dollars. They lost 13% to close last week at 13 cents US. And Cygnus, the same stock, Cygnus SCI ordinary shares USD, was also the third biggest loser for August to open the new month at 12 cents US. And just to give you the difference between the month and the week, so the week would have ended last week, Friday, and the month ends today, August 31. So if you hear a discrepancy between what it closed the week at and what it closed the month at, that's why. So here's a look at some of the highlights, some of the other highlights for the month of August. The main index declined by 1.5%. The junior market also declined by about 0.5%. And the financial index fell by nearly 3%. Ouch. And we missed one. So rounding off the biggest gains for the month of August, we also had Dolphin Cove coming third to advance 33%. And it starts the new month at $11. So Dolphin Cove, their tourism sector company, rebounding for August. Glad to hear that. So market recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. So we're going to get right into our analyst segment in just a minute. So producer, run the promos for the analysts, please.
Segment of Taking Stock, The Analysts, is brought to you by Proven Wealth and Ideal Portfolio Services.
Back to me. All right, good. Okay, so let's introduce our analysts for this week. Who do we have? Jody Ann Aris from Sagicor Investments. Like we said before, think wealth, think Sagicor Investments. We also have Dwayne Taylor, wealth advisor at Ideal Portfolio Services, and Julian Morrison, assistant manager of private equity at Proven Management. Welcome, everybody. Glad to have you on.
Hey, Kalila.
Hey, Kalila.
How's everybody doing?
Good.
Good to be here.
Yeah.
Okay, great. Great to see you. So let's start with our discussion on those two stocks that seem to be doing very, very well in the past week. August was good to RJR stockholders and good to Fesco stockholders. Julian, can you tell me what's going on with Fesco? Why the sudden jump and why everybody's suddenly interested in Fesco?
Well, given that activity on the index has been fairly, what can I say? Compared to what we've seen in the past 5 years, activity in the main and the junior market index has been below the expectations of many. So essentially, investors are looking for more tactical plays. Tactical meaning plays that are more aligned with flexible opportunities, being in and out of stocks, picking specific names and trying to take gains where possible, especially companies that are showing improvements in profitability and other key performance metrics. So Fesco, they showed some promising results for the newest quarter, and investors have responded by piling into the stock because people want to generate their gains, regardless of sluggish activity compared to the 5-year average. People really are looking to be more tactical. So that's a big part of the driver, separate and apart from the core performance of the business. And I think the general outlook for Fesco is positive, given that they have a strong presence locally in the Jamaican market, and also they're looking to expand. They have new locations. They're opening the new location that is near Mandela there. That was financed
by Ferry.
Right, by Ferry.
Ferry, and also the one on Beechwood Avenue. I passed it in the week. Last week I passed the one on Beechwood Avenue under construction, and the one by Ferry looks very impressive too.
Right. So those factors will affect the outlook for the company and by extension market sentiment.
So what's going on with RJR, Dwayne? Why are people suddenly piling onto RJR stock?
All right, Kalila. So I would rally on some of what what Julian was saying in terms of sentiment towards the company. But what we've actually seen, I want to say dating back from early July, is that there's been an increase in the volume of trades. So coupled with any interest persons may have in RJR, we're also seeing that the volumes for trades have increased significantly over that period. And moving into August, I think some of the biggest trades actually took place from mid-August up until now. So you're noticing that the price trended all the way up to about $4. I want to say 70 or 440 actually. Sorry about that. 440. But since this week has started, it has been trending downwards. So it suggests that there is also just some demand and supply at play. A lot of persons were probably interested in the stock, pushing it upwards, but the interest has somewhat diminished because the stock price has been trending downwards since Monday. So I think more or less it's more on the demand and supply. Persons having an interest wanting to see the stock price improve and have that ability to make those type of trades, hence leading to the stock price heading upwards.
All right, so let me just pull up the chart for RJR right now so you guys can see what RJR stock price is looking like. Can you see it?
Mm-hmm.
I think you're seeing yourself. Are you seeing it now?
Yeah.
All right,
Right,
so here's
Khalila.
RJR chart. Yeah, so
Right, Khalila.
for
So we
this
have
is
to
3
do.
months. Yeah, go ahead, Julian.
So it's just to add some meat to the bone. So we have to put things into context. We've noticed that the stock price was fairly flat for quite some time. Looking at the
Right.
chart, then we noticed a significant breakout towards the mid to the end part of the chart, and that really would have materialized in a matter of weeks. So what does it mean? There's a jump in the volumes, there is a corresponding jump in the price, but there is significant flatness for almost half of the graph. So the fact is, we have to ask the question: what is really behind this? Is it something that is sustained? Is it something that can be kept? Is it something that we can expect going forward? Because as investors, we are not just looking at the present, but we're forward looking. In terms of the earnings, the revenue is up 34%. The earnings are up significantly for the latest 3-quarter period, the first quarter, sorry, 3-month period, or the first quarter. They recorded earnings attributable to shareholders of 100 million, and compared to the prior period, they recorded a figure of closer to 26 million. So that's a significant jump. They essentially quadrupled the results attributable to shareholders for 3 month to 3 month, comparatively year over year. The cash is also up significantly. They generated 120 million in cash compared to a use of cash of 47 million in the prior year. We're talking about cash flows from operations. So we see that the earnings has some bucketive, meaning that the profit and operating cash flows are growing together, which is a good sign. It speaks of quality of earnings. And we're seeing that the improvement is coming from more than one segment. It's coming from print and it's coming from audiovisual. So it means that more than one income stream is outperforming for RJR. However, if I was to think about it in terms of, and importantly, they've been controlling their expenses, their operating expenses. They did some restructuring. They have been containing their staff costs, which is good. However, think about it in terms of sports. If you are a manager of a team, right, as a portfolio manager, your stocks are your players on the team, right? And you're looking at the performance of each of your players. And for so many seasons, a specific player hasn't performed. You put them out to play for 8 games, but for 2 games, they probably scored, 2 and 3 goals. They helped to win the match, but from a season perspective, the player really hasn't been doing well relative to the other players. So how do you assess the performance of that player? Is it that the player is great because compared to the other players, they're not as consistent? Or do you factor in the fact that, out of 8 games or 10 games, they only came through for 2 matches? So it's a matter of perspective. You have to look past the noise. Is that a great point?
I get what you're saying there, Julian. Has there been any update on that APO that they had said that they were planning to do? I heard some talk about an APO for RJR a few months ago. I haven't heard anything about it since, but I do wonder if that could be part of the reason for this rally. If there's some anticipation there. Anybody hear anything?
It's not impossible. The stock has its following. I haven't heard anything definite or concrete, but the stock has its following. There are people who watch RJR closely. What's also important is that from a nominal perspective of a market that's heavily driven, especially retail investors, heavily focused on nominal prices. So the fact that the stock is below 5 Jamaican dollars, a lot of people can pile in aggressively in terms of the volumes. So that's a big part of the dynamic behind the run up. People can take 30 and 40 and 50,000 and 100,000 and get in those volumes to try and double their money. So from a psychological perspective, people would take that as an opportunity to pile in, especially because, people tend to chase returns. So when they see that the stock is rising, more people want to pile in because of FOMO, fear of missing out. But again, what goes up must come down. We saw the chart and the numbers don't lie. We saw how many seasons in RJR didn't look good for. So is it that they're a good player now? What is it really?
Right. So I want to come back to the chart for Fesco because we didn't get to look at that one live just now. So the same thing, we're seeing the same trend as with RJR. It just suddenly went up and then it came back down. But notice here the volume on Monday. So on Monday, we had a big spike in trading at $2.25, almost 128 million shares traded compared to the other days when you see just like 5,000 shares traded, 2,000 shares, 4,000 here. This day we had on August 30, we had 15,000. That was yesterday. And then last week, Monday, all of a sudden, 128 million shares traded at this particular price. So that's a block of shares, wherever that came from, would have sent the trajectory up as high as $3.17 before it came back down early this week. So that's what that looked like. Jody Ann, do you have any perspective on these two that you'd like to share?
Oh, sure. I think one of the things we're seeing really is, what they probably refer to as somewhat penny stocks. I mean, when you have these stocks that are lower in terms of nominal price, people tend to speculate on them. And so you find that there's high volatility with these stocks at certain points in time. So, somebody may start to speculate. I think if we remember there was a Siboney speculation and, we saw Siboney prices shooting and then they came right back down. So, I mean, there is not always a situation where there is hardcore information that is guiding the decisions of investors. But sometimes, as it is a market, persons do probably, try and eke out a win in some ways. And so they may be betting on things or, putting in excess on certain companies just on the hopes. And particularly when it is that you notice there's movement, you may want to then run in at this particular point in time because, if something going up, you feel like, you're going to just continually, continue on that trajectory. So some of it is not necessarily, I mean, there are some positives, but I'd agree with Julian that as, keen investors, taking stock, investors are keen investors. And so we dig a little bit deeper than what we see on the surface. And so, it's really for us to do a little bit more research and see what exactly is driving these. If it's something sustained, is it just for the moment? And so we want to always dig a little bit deeper when it is that we as investors are going to purchase.
Right. Well, let's look on some news on the economic front. You notice where the economy has finally broken its losing streak. And we've expanded about 13%, which is a lot higher than what the expectations were last year, Jody. And I was just looking at so today I was going over some old videos from last year, and the expectation for this year was something like 3%. And here we are in Q2 now, at looking at 13% growth. So is this surprising?
So no, it's not surprising. I think one of the things you have to remember is that we compare is the comparison period. So you're comparing to last year, this time when COVID was fresh and everybody was somewhat retreated home. Companies started to lay off persons. The borders were closed. I think it was during this period of time where Portmore went into lockdown, and so you're really comparing what we'd call a low base. And so that when it is that you look at the numbers, the spike is not just good news, but it also presents, comparison to a relatively slow period that we had last year. I think on the good news, though, if we want to find, is that it's an upward revision relative to the 5 to 7% that was projected in May of this year. So I think when the PIOJ came out, and they spoke on the January to March quarter, and they did the initial projections. They were saying it was about 5 to 7%, and the actual, closer to the time when we're now looking back, their projections are a little bit higher at 13%. So it's really reflecting of, a low base last year and just general improvement relative to how it is that employment figures have changed last year. Persons are learning to live with COVID-19, and, there is a little bit more activity that's going on relative to last year when COVID was fresh and new and everybody was somewhat in a pullback and, wait and see sort of mode.
I see some expectations are also out in the United States. Dwayne, the chair of the Federal Reserve, has addressed the economic outlook. What is the outlook over there in the States, Dwayne?
Right. So, hear me? So,
Yes.
okay. So pretty much last week, leading up to Friday, they had a symposium which the FED chair, Jerome Powell, had spoken at. Now, a lot of talk was focused on what's the outlook for inflation, with some of the non-board members suggesting that inflation is on the verge of rising because prices are increasing and continued issues with supply chain management amongst different companies. And then on top of that, individuals, the consumers, they're now getting into that space or frame of mind where they're willing to pay for services regardless if the price increases. So there's been all this concern over the inflationary rate and if it's bound to increase anytime soon. Pretty much what the FED chair did, he just demystified all those concerns. He went into the fact that the US government is in a space of recovery. He said any talk of inflation really is just noise in the sphere, and that persons can somewhat rest assured that inflation isn't about to increase, and if there is any increase in inflation, it would just be momentary or it would just be temporary, right? Now, he went on further to substantiate all these things by discussing the labor force, the fact that that has been on the rise. He mentioned that the job report is set to come out in September 3rd, and that unemployment has also been very favorable. And with the job report, it would suggest how much more unemployment has been declining by if it had. But based off of the previous months, unemployment has been declining, so that's a positive thing for the U.S. market. Now, a main driver behind inflation is obviously CPI, or Consumer Price Index, and that's set to come out in September. Now, based off of feedback from the FED chair and what analysts are looking at in the U.S. market, it suggested that the CPI will be favorable and will push inflation in its current state even further down. So as you can imagine, if inflation is heading downwards, it's a positive look for consumers, right? Now, lastly, or one of the more major points that he tackled was tapering. Now, tapering is essentially just the gradual reduction in purchasing of assets by by the Federal Reserve, right, or the central bank. Now, he mentioned that that is something that's more than on the table. He suggested that that's something that is to come, but not immediately, and that it would not be directly tied to interest rate hikes. Now, normally,
so is that a good or a bad thing?
So that is a good thing in the sense that if interest rates are not being coupled with the tapering, then it would suggest that the stock market or any concerns surrounding the stock prices would not be as it wouldn't be a major concern. Now, the tapering, we don't want to look at it as like tightening, because those are two different topics. Tapering is just reduction, so it's just a gradual ease from buying assets because they're ultimately trying to reduce the amount of money that is in that they've funded into the market. With the tightening, that would just be an entire cutoff of purchasing assets in the U.S. market. So because of that tapering, because of that talking point, a lot of investors were somewhat pleased, because it suggested that, all right, we don't have to worry about interest rates taking a hike immediately. Yes, the government is taking the necessary measures to stimulate the economy, but we don't have to worry about stock prices or just the investment market taking a major hit. So a lot of talking points came out of the discussion, and as a result of this same address to the general public, that we saw that the U.S. market started to increase. A lot of the major indexes took a turn for the better. The prices started to increase. So overall, the sentiment is positive, but it's also a waiting game. We have to wait to see when it is that the tapering will be officially announced, because it's on the plate, but it has not been officially announced. And then we do, yes. So that's something that we have to be mindful of, and we're just looking at to see how the market will respond to it. But a lot of positive sentiments being mentioned by the FED chair.
Okay, so that's good news, but what is not good news is what's happening with oil prices. Oil prices actually rose by 2% on Friday. It's something we watch closely, because every time oil prices go up, Petrojam said I have to raise gas prices. So on Friday, oil prices posted their biggest weekly gains in over a year. Tell us what's going on with oil prices, Julian. If you're an investor in oil, it's good. If not, then...
So we don't want to get too granular, but essentially the outlook for oil is one that is guided by an expectation of higher prices that has to do with an increase in travel, particularly the activity of airplane fleets, because airplane fleets consume copious amounts of energy, and that is a supporting factor of higher energy prices. Another factor is the instability in the Middle East we're seeing with the exit of the US military from Afghanistan. And greater geopolitical uncertainty also supports higher energy prices. So that is also a factor that can propel the price of oil to go higher. Another thing is the fact that right now the outlook is a bit it's a bit choppy. There's a lot of uncertainty, and what we're seeing is the fact that the Delta variant has taken a greater hold on economic activity than most persons originally anticipated. So on the face of it, many persons might have said, boy, you might see a pullback in oil prices, but the fact is the issues that are supporting higher oil prices outweigh the things that will cause a temperance in the oil price. So in terms of the tug of war between the two issues, there is likely to be an uptick in energy prices going forward. We noticed that the hurricane that passed Jamaica recently headed towards
Ida.
Yes, Hurricane Ida. Well, it became a hurricane after. It hit Louisiana, and it also disrupted some activities as it relates to oil production plants. And that will cause a temporary supply disruption, and that would also cause some spike in energy prices. That might be more temporal, so we might see a correction there. But in terms of it being a trend, we are likely to see an uptrend gradually in the next couple of quarters because of the things that we mentioned earlier.
Well, thank you so much for your input this week, guys. We have a better understanding of what to expect in the coming weeks and months. Thanks, Dwayne, Jodianne, Julian, the stars, the analysts.
Thanks, Khalil. It was great being here.
Segment of Taking Stock, The Analysts, was brought to you by Proven Wealth and Ideal Portfolio Services.
All right, so that's basically our show for this week. Before we go, though, I want to read a couple of your comments. I saw a question come in from, who was it? Ingrid Stevenson was asking, read the insurance premium financing conversation we had earlier. She said, my question is that if the insurance is $40,000 and I borrow that amount to pay back with interest monthly, if I miss a payment, my policy would be canceled. Yeah, so that's essentially how it works, and what the opposition to this type of arrangement is saying, that it's not fair for the company to cancel the policy without notice. And that's the big issue that appears to have happened that the FSC says they've received complaints that the policy is being canceled without notice. So I think that once there is discussion between the sides, the insurance companies are able to make sure that they adequately notify the customer that if you don't pay your premiums, if you don't pay your monthly payments towards the loan, then the policy is going to be canceled, which I think is only fair. But the communication has to be there. So a couple other comments I see here that I want to take. Ingrid Jarrett said, I'm sure anything goes in Jamaica. Hi to everyone who joined. Paul Peart said, just passing through. Colette said, let's get this money. David Gray saying some big investors that drive the market, man. Yeah, that's exactly what it looks like when we saw that big spike in the trading for RJR. Colette Brown asking, do you think the government may increase interest rates? You're talking about the U.S. government or the Jamaican, the Bank of Jamaica, Colette? And remember also, the BOJ is independent from the government. So it would be the central bank that increases or decreases the interest rate, not necessarily the government. And there has been talk that the central bank here is looking towards possibly increasing their interest rates. Remember, it's been at 0.5%, a record low for a good while now. I don't even remember how long, but the past several quarters, it's been held at that record low of 0.5%. They can't really go any lower than that, other than going 0% interest, which is like unheard of, right? So it's likely that they may consider, and they've signaled at the last BOJ press conference that they may consider increasing it next time around at the next policy decision. As for the US, I don't follow them as closely. I do need to start following them more closely. So I really can't say what the Fed is considering. How you say this name? Nikta, something so, says it's very naive to mention terms like recovery without considering BRIC. Okay. That's what BRIC stand for again? Brazil, Russia, India, China, I think. K Natural One says volatility ahead, possibly. David Gray says indeed gas killing. So things that we all must consider and look out for. Thank you so much for joining us, everyone. We did have some hiccups this time around, but we are going to continue trying this format at least once a month so that we can have this live interaction. I really like what it feels to be talking to you guys live. So we're going to try to get it a lot more smooth next time, but keep in touch. And let me tell you what's coming up for the rest of the week. So we already had Money Monday's JA premiere last night. We're talking about a business startup 101. I had your checklist, so you can go and check that out on the YouTube channel. Tomorrow, it's Money Moves JA, and we're talking about remote working, very timely, given that we have these lockdown days. And then later in the week, we're also going to be looking at the NCB bond. Quite a few of you had asked me to look at that. So we're going to go over the NCB bond. It's offering 6% interest rate, and it's been extended to September 9. So we'll be looking at that possibly on Thursday, but don't hold me to that date. We're looking at publishing that episode on Thursday. Thanks again for joining me, everyone. Until next time, let's get this money.